Picture this. Somewhere in a boardroom right now, someone just found out about a merger 3 weeks before you ever could have. They didn't earn the information, they didn't work harder than you, take more risks than you, or bet smarter than you did. They just knew a guy. And that right there is the whole story. Insider trading isn't just a footnote crime buried in the business section next to soybean futures. It's now become a slow motion collapse of two systems that we've been told for years make the country work, being democracy and capitalism. We're going to talk about it. But first, don't forget to leave a comment down below and get involved with the discussion yourself. Capitalism sells itself on one core promise, and that's a level playing field. Anyone with the right idea, the right hustle, and the right information can be a winner. And that's kind of the whole pitch. It's not that the rich always win, or that the connected always win. The pitch is more like, information is public, prices reflect that information, and the market will reward skill and risk, not just access. But insider trading takes that pitch out back and shoots it. Because when a handful of people trade on facts that the public doesn't have, the market stops being a contest of judgment and becomes more of a contest of proximity. Proximity to executives, to lawmakers, to whoever's in the room when and where it happens. You could even be the smartest retail investor alive. You could read books every day until midnight with a highlighter stuck in your teeth, and you still have a chance to lose to the mediocre trader that got the call that no one else got. That's not a market. It's more like a rigged table with the Wall Street sign bolted above it. Markets don't just run on money, they run on trust. Every dollar invested in a public company is kind of a bet that the price you see will reflect something real. That the system, however messy, is basically honest. The moment that people believe insiders are systematically front-running everyone else, the trust doesn't just erode away slowly, it craters. People pull back. They stop investing in productive companies, and they pour more of their money into whatever feels insider-proof. Real estate, gold, crypto, cash in a coffee can, or even in some cases their mattresses. Capital that isn't invested is capital that isn't building anything. No new factories, no new jobs, no new medicine. Insider trading isn't just going to cheat individual investors. It's going to tax the entire productive economy by poisoning the one resource it can't function without: trust. And here's where it gets darker. Insider trading isn't just confined to Wall Street anymore. It's slowly crept into the halls of government. Lawmakers write the regulations. They sit in on classified briefings. They know which industries are about to get a subsidy, which companies are about to be investigated, and which wars are about to start. When the people writing the rules are also allowed to trade on the knowledge they create, you no longer have a marketplace. You now have a casino, where the dealer can see everyone's cards and is also placing bets for themselves. This is where insider trading stops being a simple financial crime and becomes one of democratic nature, because the core promise of democracy is the same as the core promise of capitalism, that power is accountable, that decisions are made for the public good, not for private gain. A representative who profits from the laws they pass isn't representing you, they're representing their portfolio. And when citizens start to believe, rightly or wrongly, that their government is just another insider trading desk, they stop believing that their vote matters at all. This is why insider trading deserves the word death and not just damage. It's rarely one dramatic scandal that breaks a system. It's the slow accumulation of small betrayals, a congressional stock trade here, a tipped-off executive there, a regulator who coincidentally joins the company they used to oversee. Each one seems survivable, but together, they teach two generations of citizens the same lessons: that rules are for other people. And once enough people believe that, They stop playing by the rules themselves. And there you have it. That's insider trading, folks. Where the rich get richer, the mediocre get lucky, and the rest of us find out about the stock crash from a push notification while we're finishing our coffee. And look, I'm not saying capitalism is rigged, but I am saying that if capitalism were a casino, insider trading would be the guy that's dating the dealer, all right? But before you go all burn it all down mode, here's the good news for you, random person watching this at 1 o'clock in the morning on a Tuesday. You do have some power here, okay? You don't have the buy a yacht power, or maybe you do, but more than likely you don't. But you definitely do have the annoying but effective power, okay? So let's run through some of your options moving forward, right? Number one, you got to vote like it's your only stock option, because in actuality it is. You can't trade on classified briefings, but you can vote for the people trying to ban Congress from doing it. It's a wild concept, I know. But using democracy to fix the thing democracy broke is probably one of our best opportunities right now. Number two, snitch responsibly. The SEC will pay whistleblowers, okay? So I'm not going to say much more than that, but take that information and do with it what you will. Number three, you've got to diversify like you're preparing for some kind of betrayal, okay? You don't have inside info. Some people do, but most don't. Nobody's going to be slipping most people FDA rejection letters over golf, so you have to spread your money out if you're most people. Index fund your way to safety and let the insiders fight over that one stock that apparently everyone else but you knew about. Number four, support the boring stuff. Even transparency laws. I know that regulatory disclosure requirements isn't exactly a chant that you can put on a poster, but stronger reporting rules and faster public disclosures are basically the seatbelt of the stock market. They're unglamorous, easy to ignore, but they can save you from a disaster. Number five, stay skeptical of anyone who's just really good at timing the market, quote unquote. Statistically, it's either they're a genius or their brother-in-law works at the company. Historically, you can bet on the brother-in-law. At the end of the day, the market's supposed to run on may the best analysis win, not may the best golf buddy win. So if you're not in that position, you've got to stay informed, you've got to stay a little annoyed, and maybe, just maybe, call your representative before you call your broker. But that's it for this one. Be sure to like, subscribe, and remember, if your uncle suddenly starts selling everything 2 weeks before bad news, maybe don't invite him to Thanksgiving. Take care, guys.